Good morning, it's Jeffrey Cohen, July 12th. I'm an investment advisor's representative for U.S. Advanced Computing Infrastructure, a registered investment advisor in Illinois. We provide non-discretionary investment advice. What does that mean? It means we don't take your money. You buy services and we give you insight. We give you input that you can make your own investing decisions. We don't do subscriptions or anything like that. We basically just charge for services. We charge for a run. This is a run. This tells you what stocks to pick. That's what we do. So today we're going to talk about the markets. And it's funny, I can't figure out what to tell you this morning. And so we're going to break it down and we're going to take a look at the market. I am wearing a red shirt. I do think it's a bit of a down day. But I got to tell you, I'm not sure. And the model is doing something very different. And so we're going to talk about that. But let's start it off. So, we have our trackers here. We're taking a look at different stocks. So this is NASDAQ Book Viewer. It shows you the top of the book. And what's interesting is, the market isn't open yet. And yet there's still a book being made. So, and what's interesting though is the spread. So right now, if you want to look at, let's say, Microsoft. Microsoft is at 264 and 264.39. Look at the top of the book right there. 264 and 264.39. Now, to get a 100 share round lot, it's 264.39, 263.60. So it's like 80 cents. Now it went up, it's 85-cent spread. That's a pretty big spread. The KRE is an ETF that handles our regional banks, right? Spread there, if you want to trade pre-market for 100 shares, is 51.02 to 59.48. So that's $8.46. That's why people don't trade pre-market. Now, if you find the stocks that are hot, that are moving pre-market, and there's different ways to find them. Let's look at the spider. Along came a spider, sat down beside her. 400 shares at 382.07, 400 shares at 382.13. That's only a 6-cent spread, and you see 400 to 500 shares at the top of the book. Actually, 900 shares, it's not bad, right? So there's some flexibility here. There's 382.06, 382.10, 4 cents, 400 shares. So you can see that this has some liquidity, the spider, but most of the stocks that you might look at don't. So Mullen. God, I've been listening to Tovio talk about Mullen and attack bulls and bears attacking each other. It's crazy talk, right? Just all over social media. But when you look at the top of the book, and I just sort, let's say, by price, there's a 1 cent spread. 318,000 shares are traded already this morning. There's 3,900 orders on the book. And you can go 417 shares at $1.17, 4,600 shares at $1.18. So Mullen, that's a stock that you would trade pre-market. Now, I don't know if it's going up or down, but if you just had a few minutes and you wanted to make a few trades, it's like going to the casino and playing a few hands of blackjack, then you got Mullen. And there's other stocks that you can find. In fact, if we do our down model run, there's so much I wanted to talk about with the model, but I realize a lot of that is just not going to be that interesting for you. You're going to look at me like I have 3 heads. And so let's look at LGVN, LWLG. Let's look at some of these and see if they're trading pre-market. LWLG. Wow, that spread is like 90 cents. That's not moving. Let's look at the tops. What are the top? Okay, here we go. This is stocks that traded a lot of shares. So there's so much to tell you. Guys, they're out there. There's so much to tell you. It's crazy what I'm finding in the model. There's so much to tell you. So normally, so this is 50 stocks with the most shares traded yesterday versus the average of last year. So these are stocks that are now suddenly in play, suddenly moving. And you see Lyft, which is interesting. Lyft traded only 2.25 times as many shares as all of last year. Lyft, Lyft. All right. It's a penny spread, 100 ask, 400 bid ask. I bid for 100 shares. I'm asking for 100 shares, penny. So that's not bad, but Morphic Holdings, MORF. Not trading. $10. DTIL. 10 cents. Not trading. Sierra Wireless, Digital Ocean Holdings, AXU, Wynn Resorts, WYNN. Not really trading. Buck spread for 100 shares. Dun & Bradstreet, DNB. So what's happening is the stocks that really moved yesterday, they're not moving today. There's no follow through. I mean, Carvana, 261% of the shares that traded. Oh, it's backwards. Oh, so frustrated. All right, let's go the other way. PLRX. PLRX traded 16,500%, or 165 times the number of shares that normally trade. For 500 shares bid, 100 shares asked, the spread is 30 cents. It's not really moving. La Jolla Pharmaceutical, Target Hospitality, Essa Pharma, another pharma, Gaucho, Vino, Gaucho. Gaucho's a cowboy. 51-cent share. Bid ask is 131 shares to 200 at a 50-cent stock. What's going on? How come the stocks that had traded a lot yesterday are these little tiny crap stocks that aren't moving? Mullen did 286%. So I don't know. What happened to PLRX Therapeutics? I just don't know. Don't know any of that. I'm looking. Growth Properties looks like an ETF. Kurasushi. I'm not investing in raw fish. It doesn't age well. Frequency Therapeutics. So you got Mullen. Twitter. Is Twitter moving today? That traded a lot of shares. But for Twitter, which supposedly was this huge thing, it fell like 12%. It only traded 265% of last year's average. Ah, thank you, Emilio. I appreciate it. Hope it helps. Throw out a topic if you want, and I will try to cover it live. I do that. I like that. So you see Twitter at 32.40, the 32.51. All right. So Twitter's active. Mullen's active. And you can see stocks like the QQQ, which is the NASDAQ 100. Top 3 pre-market gainers. All right, fine. Let's get down to business, as they like to say. All right, so guys, I track a number of proprietary indices. And you can see the market's looking red. So, market's not looking good. What's interesting is interest rates are down. That helps. Mortgage-backed securities are up, which should help. So, Equities got some tailwinds, which is nice. So let's see, what do we got? So my own personal holdings, just to let you know. Corbis is up 4% pre-market. I love Corbis, CRBP, high risk. I own it, love it. I think it's going to $1. I think you're going to triple your money. Pre-market, AutoWeb. AutoWeb is a stock that probably could go bankrupt. They're in restructuring. They do the internet advertisements to put a car buyer together with a car company, and they do used cars as well. Regan Cell is a total scam. RGC, Grow Generation, the pot stocks, Grow Generation and Hydrofarm are up, and they're probably trading a lot. GRWG was always a risky, crazy stock. I lost so much money on Grow Generation. What's interesting is it's not trading. It's 383 shares bid to it's 383 bid to 442 ask. So Grow Generation went to bed, went to sleep. So that one, no confidence. These are banks where the stocks should rise. Okay? So what do we got here? Carver Bancorp is another one of those banks that is just crazy, risky. It's on my list of like bankruptcy banks. Carver. But let's take a look if it isn't good for it's crap. 100 shares at 533, 100 shares at 658. You lose your entire gain just playing it once. That's like going to a casino where they charge you 25% to make a bet. Don't do that. Sounds like Bitcoin. All right. Money managers. They're always good for a play. No, Ares Management is not a high flyer. It's not bad. Oh, specialty retail and some furniture stocks. Well, the gap is down. So if you know how to short. Oh, how's PLRX looking? PLRX sucks balls. Look at that. It traded 16,506% of yesterday. PLRX 2142. Let's take a look at that. What happened to PLRX? That's funny. I probably shouldn't have said sucks balls. So sorry about that. Bad language. PLRX. Pliant Therapeutics. Wow. Look at that. It's $8, jumped to 23. Anybody want to climb that mountain? I know I don't. That's not how I play. You know, you could have Corbis for like a lot less. That's funny. Yeah, I don't know that I would be playing games with PLRX. That's crazy talk. What else we got? Well, we got to have something here. Well, I short the gap. Grow Generation's still up, but it's no volume. It's nothing. I wouldn't touch it. Nothing's moving here. Come on, what do we got? Crypto and miners. Physical miners and crypto stocks. Look at that. It's up 1%. So, by the way, you don't see stock markets that are good to invest in when your pre-market movers are moving like 2%. Okay? When Corbis is your best stock, you just sell everything and you go on vacation. Oh my God. Corbis? I love Corbis, by the way. I own a lot of it. But damn, is that a terrible stock to invest in. Nope. So nothing's moving. Nothing's up. Trucking and transport. Right? Economically sensitive area. There's one stock up. I think today is a day to short. I don't think today is a day to go long. Computers. Crap sandwich. All right. So I could go some different places, but this is not a... this is garbage today. I usually look at my Walking Wounded as a place to maybe... If you're looking for pre-market moves, right? Oh, GOEV. I don't know. I'll take a quick look. GOEV. So, Rewalk isn't bad, but it doesn't trade enough volume. Nothing's moving. Now, Carlyle Group, that's one of those value plays, right? But they might be about to lose a ton of money in China. Carlyle Group, up a couple of pennies. Look at it over a year. It's taken a nosedive from about 60 to about 30. But Carlyle Group is well managed. And so there's something there. GOEV. You know, I've never looked at GOEV. I don't even know what they do. Holy crap! Look at a pre-market. GOEV is up like crazy. It's up 73%. Wow. But how many shares? Not bad. It's a penny spread. You can buy about 2,000 and they're trying to sell 7,500. So it's a penny spread. So if you want to play, GOEV. It's so interesting. Okay, it's interesting. GOEV. You know, I don't even know what they do. So what else do we have? Let me walk you through some of the other things that are like interesting, important as you start to trade this morning. I'll give you the quick look, and then I'm actually gonna tell you what I found in the model. Not that I want to freak anybody out, but let's take a look. So we ran our model super hard, super long, and super crazy. Our model suggested Apple. Isn't that crazy? Apple to be held in a small portfolio. Apple and APAM, which is an investment manager with a super nice dividend. INTU, EL, NVIDIA, Microsoft, and then Shenandoah Valley Telecom. What? VMware. And then RMR, which I don't know. EL, I don't know. CHRD, that I don't know. AFG, I don't know. And you're going to get basically 6 ticks. 6 ticks over the S&P 500. And if you want to blow up the size of your portfolio for the same 6 ticks, you can go up to 17 shares, 17 stocks. And it includes things like QRTEA. Holy crap. Let's copy it. These are our picks today. And so the problem with this list for me is basically it's like half risky, really risky, like QRTEA, Qualcomm, NVIDIA, stocks that have been dropping, Microsoft, Apple, Juniper, dog stocks that don't move like Shen, BX is down in the dumps, APAM, those are money managers. And so it's just so interesting, right? And so the other thing I wanted to share with you is the riskiness of stocks. So as a money manager, we actually have to help widows and orphans and old ladies and stuff, right? So the variance of these are the money-making stocks. These are the profitable stocks, right? That pass data validation. These are U.S. listed, U.S. headquartered companies that make positive net income. trade every day and have a positive beta, right? That variance of 1.9 times 10 to the negative 4 is super high. Super high. So what happens is when stocks have a really high variance, it's not helpful. Not helpful for you as an investor. So now these are the unprofitable stocks. That is also a super high variance. And you compare that to the S&P 500 variance. And that's the spider. That hasn't moved much, right? And the last thing to show you is the risk-free rate of return in this market. So if you held all the stocks, all the major exchanges, our model says you can earn 3%. So this is not a stock market to be long invested in the short term. This is just awful, right? The variance has just climbed exponentially in the last couple days. So what does that mean? It means it's going to be a shit show out there. The only way that it makes sense for stocks to have a 3% expected return and to have these types of variances is if the stocks crash and then you buy them after the crash. That's nuts. Oh, GOEV is starting to slip lower. So I wouldn't do that. I don't know. So here, let's go back to Spider. QQQ. Carry's not moving. No one's trading it. XLF, financial stocks. Hard to tell. That doesn't look like it's moving. And then we're going to keep GOEV up. We're going to keep Mullen up. Because those are stocks that people like to play in. And CRBP. Holy crap, they're asking $3 a share pre-market. Holy crap. Can you imagine? I almost want to buy 100 shares at $3 just to paint the tape. I won't do it, but can you imagine if CRBP trades at $3 this morning? Yeah, people know it's going to get bought out. Probably going to get bought out by Pfizer. There's a high probability. I saw that on Twitter, actually. Somebody posted that there was a high probability. Right there. CRBP, diamond hands by the professor on acquisition probabilities with Pfizer over their cancer tumor reducing drug preclinical candidate. Maybe it's going to happen. Maybe Corbis. This is the day when it goes crazy. I don't know. See, Summit not really moving. This is a stock that I think drops through the toilet. Is Lakeland Financial, and I think Bank of Hawaii is going to drop based on real estate troubles and mortgages being high. Corbis, I see that as a $3 stock. American Shared Hospital Services just doesn't move. Your mortgage-backed securities are up today. Your interest rates continue to fall today. If we look at it over 30 days, it is down. I don't know why 30-year and 10-year treasuries would be down over the month, but they are. Nothing here in the top trends. You look at 5 days, pull in the Russell, take out the Dow, look at the VIX. VIX is down. There's no fear in the market. Oh, Twitter. Oh, yeah. Twitter at 32.51. I don't have a position in it, but I like Twitter. Hang on a second. Cat wants to come in. Here we go. Cat cameo. Come here, Cat. You're going to be famous. I know it. This is the famous pumpkin spice. Pumpkin spice trades with me all day. I'm going to trade stocks. All right. No, he doesn't actually trade. He just eats a lot and catches mice. So, yeah, Twitter, I don't know. I think it's super interesting, right? The whole story with Elon Musk, and I don't think it's over. And he still might end up buying it. But there's so many bots out there. It's crazy. I'm constantly muting bots. Anytime that you see this, I muted them all. But here, don't miss the next move in a few hours. Top analyst price target for next week. And then there's something else where they always say earnings. Earnings coming out before the market opens tomorrow. And it's always wrong. It's just crap. It's not real, right? So Corbis yesterday popped. And we don't know why. Right? But it popped on a lot of volume. People made some really, really big bets and big investments on Corbis. So that was interesting. Freeport-McMoRan. So there's a whole bunch of stocks that we track that look like Freeport-McMoRan. We're going to talk about it for a sec because I think it's super important. By the way, anyone interested with the euro hitting parity with the dollar? First off, great time to go on vacation, right? But I'm going to say it. Yeah. Too many bots. So let's take a look. So first off, I really like these stocks like BHP, Rio Tinto, Vale, Newmont, Freeport, Nucor, ArcelorMittal, Steel Dynamics, Cleveland Cliffs, U.S. Steel, Commercial Metals, Hecla, Core. So these guys are gold. And if you look, gold's up, so they're up pre-market. They don't look bad. Gold is up, right? Steel, Commercial Metals, U.S. Steel, Cleveland Cliffs, Steel Dynamics, ArcelorMittal, Nucor. So those guys are all down or flat. Because, steel is used in a growing economy, right? And if the economy is not growing, they're not going to do well. Freeport-McMoRan is about copper. And then Vale, Rio Tinto, BHP just do a lot of mining. They're more diversified, right? And so they're down. So this is a recession bet. Now these stocks can drop another 50, 70, 80% and still be in the money, right? So you only buy those economically sensitive mining stocks when it looks good. Let's go back to our walking wounded. By the way, I wonder if Deutsche Bank's going bankrupt. Bad exposure. So let's talk about RGC for a minute. You guys want to play in the thin air? Regan Cell Bioscience Holding Limited uses holistic medicine to cure diseases. They've got a guy in China that does some hocus pocus stuff, and it cures everything. Tightly controlled and managed stock trading. They actually kept the stocks tied up. Oh, I know it is. Still no news. Corbis is hot. It's hot. It's going. But it just may not go this morning. It may not go this year. Right? Let's go. So, Bank of Hawaii, Lakeland, they're not moving. So let's take a look. So this Regan Cell is tightly managed. So if you can short it when it's really high, and it comes back down, you'll do great. But it's so tight. It's such a tight stock. It traded like 34,000 shares. Um, I want to say the book value is like 5 million. It's nothing. There's nothing behind it. And so this is one of those stocks that I watch. This is a tightly managed and controlled stock out of China. So the place where I think you're going to have problems is in the banks. And it's interesting because, of course, pre-market, right? How are the banks doing, right? So some of them are down. Citibank is down. Wow. Only 2 of them are up. So I would look to shorting the banks as housing prices fall and mortgages become more expensive. Recession. Don't pay bills. Banks fall. That's actually where part of our investment is right now, is betting against the banks. I know it's not politically sensitive, but it's actually not bad. So Lakeland Financial still hasn't moved. Bank of Hawaii still hasn't moved. Corbis still isn't really trading. It's up a penny. American Shared Hospital Services is a deep value play. That's probably something that you buy and it's going to double and you're going to be happy about it. But it's interesting. 30-year Treasury bonds, popping up a little, right? So I think what's happening, if I want to call it for real, I'm going to pull up FinViz. I like FinViz. I'm going to start with foreign exchange. The reason that the euro to the dollar is almost at parity is because people in Europe that have a lot of money and big banks like Deutsche and Credit Suisse and UBS, I think, are fleeing the risky investments that they had made, and they're putting their money in the U.S. I think the reason the Japanese yen is at like 137 is a different story. I don't think they're fleeing to take Japanese money and put it in the U.S. I think they're trying to protect Japanese exporters and Japanese businesses by destroying their own currency, by protecting bonds to be at like 0.25 percentage point. And so 2 different stories, right? But what it means is that the dollar's super strong. Strong dollar means weak Bitcoin. Bitcoin has come back to its support level at 20,000. And on the futures, a strong dollar usually means bad stocks, right? But they're not moving enough for it to matter, right? So then we look over here at bonds, and when the 30-year bond is at 140, it basically means it's recovering, right? It's recovering to where it was in April and in May. Long bonds, right? When the interest rates go up, it means there's something to invest in. When the interest rates go down, it means there's nothing to invest in. And I'd rather just give my money to the government for 30 years. Well, that's what the story is telling you. It's telling you that for a whole year, there wasn't much to invest in. You could play the stock market, but you weren't building factories. And then it dropped because interest rates starting to rise. Also, they're fighting inflation. And now they're starting to pop up again like inflation doesn't matter. But inflation still matters. It's still something to fight. See if anything showed up on Twitter that's kind of interesting. Nothing. I do use FinTwit a lot to track what's going on, and I'm just not seeing anything. There's a bunch of crap. I'm not seeing any stories, right? Let's look at FinViz News, right? Anything. What's the compelling theme here? Recession worries. All right, fine. Brazil's looking hot economically. United Arab Emirates stocks are up. Futures are mixed. No Prime Day for Walmart. I mean, there's nothing going here. Recession calling on Sunday. I see a lot of people talking with nothing to say. So let's go back to what we know how to do. Right now, our models are saying that the stock market has more risk than it has had in a really long time. Right? So here's the net of our model. Stocks are way more risky right now. They're blowing out their correlations. And risk-free rate of return is going up. You know, you can buy an I bond right now and lock in 9.62% for 6 months with no risk. Holy crap, Batman. You can earn 10%, right? If you only have 10%, 10 grand to invest, you drop in your I bonds and you go back to work, right? It's crazy talk. For most people, that's enough money to make, right? And so I think stocks have to fall to justify lower expected returns and higher risk. It just has to happen, right? And so then the question is, what's going to happen with earnings and what's going to happen with everything? But who knows? Let's see. Anything moving? Twitter? Not moving. QQQ? Not really moving. Wow, Corbis isn't even trading this morning. Nobody wants to touch it. GOEV is GOEV is up. It's like 75% up, but it's not moving now. The move happened, right? And so now let's run through some other economic stuff. Let's see what we got. How's AutoWeb doing? I still think there's a play with AutoWeb, but it's more of a depressed asset play. All right, Regan Cell. I dare you. You've got your cannabis infrastructure and AutoWeb. I wouldn't touch any of those. Oh my God, that's so painful. Carlyle Group is up a little. It's interesting, right? A lot of smart people work at Carlyle. But that stock has been poorly performing. And BX is the same thing. Right? Blackstone, super smart people. All they do is try to make money, and that stock has gone up. It looks like it's not even a head and shoulders. It's 1 up, 2 up, 3 up, 1 down, 2 down, 3 down. It's crap. It's awful to watch this, right? APAM. Artisan Partners. Over a year. It's climbing to 52. It's down. It hit almost 30. It hit 32. But these companies that invest in the stock market are not going away, right? Morgan Stanley. It's not going away. Right? Not unless there's a crisis. But Morgan Stanley is down 25%. Goldman Sachs is down 25%. BlackRock, like crap, is down 40%, 35 to 40%. Right? These companies are really struggling right now. And so the investment management community is down. Now we look at Apple. And these are stocks that our model likes because they've actually kind of played out a lot of their risk. So if you look at Apple, little rise, big rise. Tried really hard, now just collapsed, right? So Apple really took a shot at 180, dropped to 137, dropped to 130. I don't know. Apple may drop to 100 or it may go to 150, but it's kind of worked out some of its successes. Microsoft, same kind of thing. A year ago, 277, popped to 343, down to 264. And so These are the stocks that are model likes, right? Because it's kind of played out the risk. It's gone up and it's gone down. And so, oh, Corbis would probably have to go up as some previous market orders getting filled, right? I would say don't be so sure on Corbis. So here's the issue with Corbis, right? First off, I own Corbis. I love Corbis. Corbis should go up to like 100. Then I could buy a new computer, buy everything new, right? But if we look at Corbis, right? Corbis, $7 stock. It was fine. Dropped down to $1, climbed to $3, and is ridden down. So here's what happens with Corbis. Number one, there's day trading scalpers all day making 2% to 3% per trade all day. They keep the thing moving, right? That's one. The second is it climbs at the open, shorts down all day, and then at close, they either paint the tape or ladder it down, or they pop it up. Oh yeah. You're probably making good money on those edges. That's good. That's cool. So you got it. It doesn't have to move. That's the funny part with these stocks. They don't have to move. All right, what else? What else is interesting? So let's look at the 1 month. 1 month at 1.535%. So interesting, right? Money's getting a little more expensive. It's not like 5% money, but it's getting a little more expensive. How are we doing on bonds? You know, I do like to look at fixed income. Corporate, advancers over declines. Yeah. This is always interesting. You know, this thing still works this way. Corporate bonds still 10.5 times more new lows than new highs, even though you have like almost a 2 to 1, 1.7 to 1 advancer to decline ratio. So the bonds that are pushed down continue to drop. Do not catch a falling knife in fixed income. And then you look over at FinViz. Look at the home and look at that. 23 new highs, 200 new lows. That's like 13 to 1. New lows, new highs. So they're just pounding the hell out of stocks that are already down. Do not buy stocks that are already pushed lower because they're just not going anywhere, right? And so it's just so interesting. Yeah, Corbis isn't going anywhere. I'm going to be dead by the time Corbis makes any money. I think that's it, guys. Good luck in the markets today. And just don't forget this stuff, right? This is the kind of the techie geek stuff that we do, right? And so if you're not a trader and you're an investor, market return of 3%. That's because the QQQ delivered negative 19.25, excluding dividends. With dividends, it's down about 18%, 18.25. The Russell 2000 is down 22%. This thing's been down over 20% for like a month or two or longer. Spider's down 10%, dividend of about 1.3%. So you're down like 8.7%. You've been hurting for a long time, but the spider variance at 1.6 times 10 to the negative 4, it's about the same. Your profitable stocks typically had about the same variance as the S&P, which makes sense because the S&P is all of the big stocks. But now all the profitable stock variance has popped up way higher. It's 1.9 times 10 to the negative 6, 20% higher. So investing in individual stocks is now worse. You look at unprofitable stocks, and it's 5.4 times 10 to the negative 6. So just look at 1.6 for the spider, 1.9 for all the stocks that made a profit, 5.4 for stocks that did not make a profit. The market is going to fall. And so when our model is telling you to buy Apple and Microsoft and NVIDIA and Qualcomm and BlackRock and APAM, Artisan Partners, and QRTEA, Qrate, and VMware, Juniper, this is not normal. These are not normal picks, right? So the market's shifting you. The model's telling you that the risk is leaving tech. So maybe it's time to get into tech and money managers that are going to survive. And so, all right. Hey, thanks. If you like the video, hit the subscribe button. It helps. I love it that you made comments while we were talking, made it so much better. Drop comments below. What happens is YouTube then promotes the video. We don't advertise it. We don't get paid. We do this in order to sharpen our own thinking, to make our trades better. So good luck today out there. Be safe. Peace.